The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's program brought to you by...
So she didn't inherit Grandpa's jawline, but there's no doubt she's family. It's your job to raise her, and it can be tough. Let's make it easier. With technology and automation, you can do more, like produce high-quality bales with way less effort. Built-in sensors can measure bale moisture and size, so you can monitor quality on the go and manage your fleet from your phone. Sit back and enjoy effortless operation. Discover an easier way to work.
Well, we saw a fairly quiet market trade on Monday. Narrow ranges in the grains and oilseeds, mixed activity in the livestock sector as well. End of the month, end of the quarter. USDA reports coming on Tuesday. Let's talk through some of this market action here on the show today. Brought to you by John Deere. Turn your hair silage into consistent, dense bales with John Deere round balers. Learn more at Deere.com. Joining us for market analysis, John Heimberg with Total Farm Marketing. John, good to catch up with you again this week. I know both of us are licking our wounds from the Packers tie on Sunday Night Football with Dallas. And at least we had a quiet market day on Monday. Not a lot to write home about. Just felt like a calm before the storm, so to speak, with USDA's grain stocks reports coming on Tuesday, John.
Yeah, very much so. Markets today were kind of like the end of that game last night, pretty unfulfilling in terms of activity here today. So just saw a lot of just choppiness. We got quarterly grain stocks tomorrow. There is some concern in this marketplace that corn supply could go up a little bit tomorrow over expectations. And, realistically, that wouldn't surprise me. It's something I've talked about in the past with producers. And, if we were as tight as we were through the summer months, you would have seen some more activity in the cash market and things of that nature, especially given the demand that was out there. So back in my mind, I'm kind of going, maybe the USDA comes back and says, hey, we shouldn't have taken 4 bushels per acre off last January. They put a little bit back into the pile picture. I think that's some of the reason the market's been so cautious here. Obviously, harvest pressure is a big factor. We've got some gorgeous weather basically right now for the majority of the Corn Belt in terms of ability to get stuff done. Talking to guys today, trying to talk to guys today. I left a lot of messages. Just tells you everybody's going full speed. We're expecting to see corn harvest up to about 20% on the quarterly, on the grain harvest crop progress numbers. There we go. Yeah. Here coming out in just a little bit. So, and I expect that number to jump pretty significantly for both corn and beans if this weather holds, which it sure looks like it's going to, with warm and dry temperatures across the majority of the Corn Belt here over the next 5, 6, 7 days.
These markets have largely been kind of just choppy here for a while with harvest ramping up. We're getting to end of the month, end of the quarter here, plus those reports from USDA on Tuesday. I guess there's going to be a lot of news thrown at these markets here over the next 48 to 72 hours. Something we've seen this for quite a few months now. We have these days where we throw a lot of news at the grain markets and we digest it and quickly kind of let it go. It's been interesting to watch these grain futures be somewhat resilient even amid all the news that's been thrown at them over the last several months, John.
Yeah, and I think a big part of that is just regardless what the numbers are coming in from the USDA or wherever they're coming from, I think this market's got itself pretty content on what it's trading right now for what the potential corn crop is, and maybe a little more variability on what they think the potential soybean crop is. But with a combination of in the corn market, good demand keeps us supported. A couple more announced sales on corn this morning. This 420 area just seems to be kind of holding us. Wouldn't be shocked if we break a little bit tomorrow on just some pre-report moves. But then I think if the numbers come in and don't give us anything extreme, that the market probably goes right back to thinking, okay, this crop is not as big as it can be. And we probably could see some buying strength out of this here again in this window, like we kind of saw at the last USDA report. That wasn't exactly a friendly report, but we rallied nicely off it just because we didn't get any over bearish news that we weren't already having priced into the marketplace. Over in the soybean side, a little different story going there. Obviously, the big concern continues to be that Chinese demand. And, we went through the export tax window with Argentina and saw a lot of activity. India buying soybean oil, obviously China buying beans, things of that nature. Again, narrows up that window for those U.S. beans. But again, one of the biggest pieces in that bean market still is going to be the lack of acres from where we thought this would be. Those 2 million acres we lost back in August does come into play. Now we start getting that yield to fall apart here a little bit more, which from just talking to people kind of sounds like that it's going to be the case. This bean market, despite the lack of Chinese demand, could get a little bit tight. And that's some of the reason I think this $10 window has been holding is just the fact that we got 2 million less acres than we thought when we put the low in back in, after the July report. So with that, obviously the bean side, the demand is going to be key going forward. Does feel like we want to make a break for about 20 cents here, especially with this consolidation side. But boy, I think if we get back down there again, just because of the lack of U.S. production, this market might find itself a bit of a bottom again and just continue to go off the bottom of the range there around 990, and work this basically two-sided range we've been in for almost a year now.
I'll throw in the wheat complex as well, thinking about just the grains in general, a lower dollar, and thinking about the end of the month, end of the quarter, potential of a government shutdown, gold hitting all-time highs, things of that nature, thinking about the outside markets, but specifically the dollar. Wondering if we see the dollar trend lower, how much that could help out the grain trade through this USDA report and beyond. And what's your thoughts when you think about some of the outside market features here this week, John?
Yeah, I think that's going to be a key piece is, we've had the pretty nice price recovery in the dollar index after the Fed made their rate cut here a week and a half ago. And I think that was a big piece of the way the corn market, wheat market, and the markets in general acted. I mean, let's go look at money flow. With the exception of the hog market, funds are pretty much sellers of the ag space. And that's probably tied to the strength that we saw in the recovery we saw in the U.S. dollar post the interest rate cut. And just so some reaction there. So we're going to have to kind of see how that plays out. Again, this is also a window too, just because of seasonality, harvest pressure, and where we are in some of these markets, that it was just easier for them to be sold than bought here. Now we'll see if we can find some footing again, at least in terms of money flow, going forward. So those outside markets and everything going on there, obviously, again, here we are, government shutdown time again. First off, if that doesn't come together, do we even get our October WASDE report next week? That could be something that could be on the bubble. And I think this market might need that news of, hey, this crop continues to get smaller, in terms of that October WASDE. So we'll have to see. It's going to be an interesting few days. And there's a lot of things moving around out there in terms of moving parts. And in the markets, we got a lot of bushels moving around right now, which a lot of times, like I said, just makes it a little easier for things to fall apart and go down. But at least we've been seeing some, when things drop, we see those buyers step in, especially in the core market, and try to secure more supplies, which tells you that they're concerned that the supply picture might be a little bit tighter than the market's anticipating.
Let's go over to the livestock trade. How about the hog complex on Monday? It felt like, to me, it was some intermarket spreading to some degree in futures. What are you feeling when you look at the lead hogs right now, John?
Yeah, I think that was some of it today. We've had a nice run in the front end of the hog market. Maybe we see a little pullback and take a little bit of bear spreading or, exiting some of the bull spreads. You still look at the base fundamentals, though, especially for that quarterly hogs and pigs numbers. There was some friendliness in that report in terms of just those lower intentions, in terms of farrowing and the lower pig crop numbers. And I think that was really supportive of those middle months, the February, April time window. You still look at where the market is compared to the index. October's kind of narrowed that gap, but boy, there's a pretty big gap out there. December and February feels like maybe we got some more room for those back markets to run in longer order here. So I kind of like where the hog market is. If we get some more push, and then I'll probably be a seller for the back end for people that got some hogs that need to lock in. The other side of it, though, the funds are now in a record long position. And they, sometimes they don't need news to make them want to get out of that position. They've expanded it off of last week's record, not by much, but still added more contracts to it. And right now, just like I said, in the entire agriculture space, just kind of feels like the hog market's where the money wants to be and is a little bit excited to be there, versus the grains, which have gotten quiet. And we'll touch on cattle here, which realistically the funds have been walking away from now for a handful of weeks.
It's a good point. Now, I'm glad you brought that up. I know cattle cash trade last week was like 3 to 6 lower if you're looking at the north of the south, and futures a bit of a down day to start the week on Monday. Obviously, end of the month can tend to play a role in cattle trade since it's tied somewhat closely with stocks and outside markets. What are you feeling here with cattle as we look to close out the month of September, John?
I don't like the look of the charts right now. We got a couple cattle charts here that look like they're about ready to let loose for a technical break. Even though the fundamentals in the long run are still very supportive, but like I said, technically we're dancing on support. We've been back here retesting this area. Again, you got funds walking away from their long position, so you got some negative money flow. Just feels like this is a spot maybe the market's gotten a little bit tired or a little less interesting to some of the outside money. And so we'll have to watch. But now I'll tell you, if we do get a break, we come down another handful of dollars, go back and check the next support level. You saw the cattle on feed numbers, continue to see the inventory numbers where they are. There's just going to be some room again in here fundamentally. I think this market could get itself pretty cheap again. Maybe here's our kind of seasonal peak rollover, and then we get another run at this thing going into the first of 2026. Because, again, those cattle on feed numbers just didn't give us anything here a week and a half ago that just made us feel warm and fuzzy about the cattle supply.
How about the dairy complex, John? I know folks gathering in Madison this week for World Dairy Expo. Sure, there's going to be a lot of talk and conversations there about different segments of the dairy industry. When you look at the markets, what are you tracking as we close out the month?
Now you got a market that continues to kind of fall apart very quickly, but we get down in the low 16s. Here comes the buyers again. So at least starting to show me that maybe there's some good value in that window. $0.40, $0.50, $0.60 off those most recent lows. A little bit of strength in cheese trade today helped out in that regard. So at least we're at a spot. I think maybe we got a bit of a floor put into this market. Not sure how much upside room there is. Obviously, milk production report last week continues to stay heavy. Warmer weather and those types of things in this time frame keeps milk production moving right along here, which is still going to be the negative on the market. Where we want to get started going here, just given the cow numbers and the production that were out there in terms of getting some floors put back together, whether using put strategies to at least protect downside or even just doing physical hedges.
John, if folks want to reach out, have a conversation with you at Total Farm Marketing, what's the best way?
Feel free to give us a call, 800-334-9779. Shoot me an email at totalfarmmarketing.com. And don't forget the website, totalfarmmarketing.com.
And I should ask, any other final thoughts or anything you'd reiterate for folks this week, John?
Let's see what those grain stock numbers give us tomorrow. One of the little wrinkles in this, even though numbers could be a little bigger than expected, we're still 400 million bushels below last year, obviously with a record harvest coming. But again, that's just reflective of the good demand that's out there on the corn side, that is. Same thing with soybeans. Usually corn's the one that can put the bigger surprise out there, just because that feed usage number is always kind of a guesstimate. And we'll have to see how that plays out here as we get into those numbers tomorrow and sets us up here for the fall.
TotalFarmMarketing.com for more. John Heimberg, always good to talk with you, sir. Have a great week. We'll talk to you next week.
Sounds good. Have a great week.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.